Today, we are going to look at the bull quiet market regime and get ourselves a buy the dip day trading strategy so that we can trade it simply, prop, your own personal account, whatever you want, day trading in the bull quiet market regime. Let's go. What's up, everybody? Chris over here, founder of PollinatedTrading.com. See that transition? Sweet. And if you're into actual real life trading, this is what we do, data oriented, actionable items, like and subscribe. But actually, really go to PollinatedTrading.com and sign up for the free newsletter, because I put a lot of this stuff, the actual data that I'm talking about here, I put all that in the in those emails. So go do that. Let's take a look at this past trading week on Nasdaq futures. Here we are. So let's start out. First things first, what are we looking at? On this left screen, we have Nasdaq futures. So it's a daily chart, okay? Each bar represents a whole trading day. And down below, we have my favorite market regime indicator. The whole job of this indicator is to tell you what the market regime we are in is. The job of a market regime is to tell you what type of trading strategy to use. If you don't know what market regime you're in, you just throw up any random old strategy and hope it works. In this case, we actually go and we organize the market by different regimes. And when we do, then we test different strategies to that regime. The I call it's the trading theory of relativity, where it's relative to what? Like, that's a fast market relative to what type of market? That's a bearish market relative to what? So using the market regime SQN tool, which is free on TradingView, I put it up there. You can go and grab it and add it to your chart. This is here to just say, hey, we are in this current market regime. What strategies work best in this regime? In this current market regime, which we categorize as bull quiet, meaning it's bullish, rising, and the volatility is relatively low. The higher the volatility, that's when you get into these this blue thing. And the blue, we talked about in a video prior about market regimes. When would a major market top happen? That's when you get these blues. Okay, that's when you go low volatility, you sit on your hands, you step away, you kind of don't do as much unless you have a high volatility type of trading strategy. So let's take a look at the daily. So it's right at the beginning of a bull quiet market regime, but actually kind of neutral. So we could find ourselves in a place where it could very well just go sideways. It also, this buy the dip strategy, a mean reversion strategy, works great in neutral and bull quiet environment. So from here, we're going to say, okay, we know what the market regime is. We know what type of strategies we should be looking for. You can just look at the chart here. In this green area, this is the bull quiet area, you end up getting these moves that, like, here's a good one. It opened up pretty much at the previous day's closing price, went all the way down and came back up. Down and up, down and up. You have these bottom tails quite a bit more in these periods, or you have periods where it's a little bit down and then it's strong up. So that's a pretty common. And again, notice that during that whole period that we were neutral here, it was rising. It wasn't until we got to the very end and started putting bigger percent move day after day that we hit that volatile point, which is that signal that, hey, this is delicate. This is, we are fragile. Price has gone up too high, too fast. Here it doesn't. This is all fine right here. But when we get that blueprint, that's saying it's too high, too fast, and we need to take caution. And yeah, you can see there's a 10% dip. It was 10% on S&P. What was it on Nasdaq? Oh, a 17% dip on the Nasdaq after printing just one day of bull vol. So that's it's rare that you nail it like this, but it is not uncommon that after a bull volatile move like this, where it's multiple big up days, that you get anywhere from like a 7 to 10% correction. This one happened to be 17%, so not tiny. And we haven't even actually taken out the new highs since then. unlike what happened in S&P. We are at new time highs. So again, bull volatile. Let's move off to the daily or the intraday chart. Now, this is a 5-minute chart of Nasdaq futures. This blue vertical line right here, I put on the chart just because what that's saying is that this is what the new week starts. So this was Monday, September 30th, 6:30 a.m., the 5-minute chart. I don't have any overnight data on this, okay? And so all we're doing right now this is the beginning process of figuring out what type of trading strategy to build. I'm not saying that this is the trading strategy to use. I'm saying let's go and let's run a little experiment and see if we can come up with something to do. And if we have an idea that starts to gather success, then we can go and code that or go manually backtest it or start collecting data on it and see how it works in, first we'll start out with the bull quiet regime, but we'll look at all regimes too. Okay, so I personally have a little bit of a checklist when I am day trading on a discretionary basis. If I'm running my algorithms, which mostly what I do, this doesn't matter. But as I'm looking at this, I need to determine, is this a day that is normal in the bull quiet market regime, where 70% of the time it's a mean reverting day, where dips can be bought. You can even short rallies at key levels. And so the way I determine that, first things first, what's my market regime? Bull quiet. Okay, buy dips. Oh, dip buying is okay. Number two, who's in charge? So for me to answer that question, I look at the overnight session. Or have we moved recently in a really big way? So for example, like an interest rate cut, CPI print, or some sort of, elections or war or whatever. Is there something that's bigger, like, somebody, another time frame is in control, meaning, are people flipping 1,000 and 5,000 lots of S&P's futures? That's not my game. I'm like up to 10 lots of ES sort of guy, not really a 1,000 or a 5,000 guy just yet. Okay, so right now I'm looking at this, I know I'm bull quiet, I'm looking for dips to buy. Who's in charge from the overnight session? It doesn't appear that anything gapped over the weekend. It doesn't appear that anything caused me to believe that this is going to be different than a normal day. 70% of the time is going to be mean reversion. It's going to be an opportunity to buy a dip. I just kind of like wait it out, even add to the position as it moves in my direction. So one thing that's indicative of that is prices, key levels get ran oftentimes. So ultimately key levels are respected, but if they are being ran and then reversed, that's actually a really good indicator that it is mostly just algorithms and traders trading, not like a big 5,000 buy order on get me $500 million in S&P futures by the end of the day type of trading. It's like, you and me back and forth doing it. So what we're going to do, first thing, we identify the market regime, identify if somebody else is running the show today and we, aren't going to run our typical strategies. So far, I don't see that the case. Now, next thing I'm going to look for is key levels. So I'm just going to go mark off some key levels here. So this was like the Thursday high. I'm also going to do another one from this big swing high for the week, this big gap up. Those are some key levels. And then Tuesday. So the low of the week would be here. So let's go ahead and add that too. So it's previous week's low. Looks like there was a gap in here too. That seems like it might be useful to take note of as key levels go. Extend it out the week. So now I have kind of a footprint of what could possibly be taking shape this upcoming week. Okay, so we know what regime we're in. We know most likely who's in charge, day traders. Okay, let's go see how the day progresses. So this is the open on last Monday. I'm looking for weakness at a key level to buy. To me, a key level is going to be probably the low from whatever the most previous swing low, because it looked like it opened there and came back to it. So right now that's a level. The 30 minutes into the trading day, that's a level that I'm going to pay attention to a little bit. Okay. So I might be a buyer down there. And price reacted up off of it. So now that says, cool, let's consider this a buy. What I have conditions. I'm going to wait for certain conditions. I'm going to use my curvy setup to look to buy this, because that gives us the confirmation that it's actually moving. So I'm not just going to market buy at this line. I'm going to wait for the curvy pattern to show up. Okay. Stops were ran. So who's in charge? So far, it looks as if traders are involved, but it has been like a straight half hour of selling. So that could be something else. I don't know. I don't remember Monday, by the way. And there's our thrust up. So I'm going to look for a bit of a pullback on that. There's my pullback. So I'm going to buy above. If I get a green, an up bar, I'm in. Not yet. Okay, I'm going to buy above this. So my long entry will be, it's a positive close. And generally, scoot over a little bit. It looks like I'm just going to use the low of the day as my stop. And I have another key. So my next key level that I'm going to be looking for is probably going to be somewhere. I have to scoot it over so I can not get that little plus sign. So I'm looking maybe all the way up to this high, but somewhere in here is probably where I'm looking to take my profits. Okay. So my stops here at the low of the day, below the low of the day. And then I'm looking for it to start moving higher. So I'm in. Coming up on a little bit of time here. So let's look left. It came up to a key level here. So my entry would have been at 21, 190, let's call it. And we made it up to 250. So a 60-point Nasdaq move so far. Seems to be okay. And it's still holding my key level here. Okay. So let's see how much R this would have been actually. So 1R would have been the first price target. Okay. Came back down to my entry area and bounced and stopped out. Okay. So the first thing I'm going to say, I'm going to write down here. So I'm just keep notes on this the whole way through. Take profits earlier. That's my first note. It would have been a winning trade if I got out at 1R, but I was holding to a higher level. I'm building this as we go. So take profits earlier. And yeah, that's the other thing I know is that, well, I'm not going to do anything else yet. Okay, so I would have stopped out there. And you can see that now I got confirmation now that somebody else is in charge. Wait for weakness fail. Unless news hits the tape, that changes everything. So this most likely was news coming in, because that's the biggest candle body we've had all day long. And it happened right at the top of the hour too. So probably news. It's recovering back. Again, I want to look to get long if I can somewhere. Okay, I'll try to get long in here somewhere. That's a good spot. Okay, I'm long again. Let's put another trade here. And this, we're saying probably is, back somewhere around the opening price. There we go. Let me put my stop at the low of the day here so we can actually truly measure what that one would have been. And that would have been the close right here. Okay, so let's just exit on close here. So this one would have been 1.32R. The first one would have been potentially a 1R or a negative 1R. Either way, we know we're selling into this area. We're taking profits earlier. So this is the end of the day. So let me add another. Just makes it easier for me to keep track of new days. Best case scenario, geez, 2.3R, 2 for 2. Then normal would be plus 1.3. I'm sorry, plus 0.3 R. So it'd be 1 for 2, where the first winner was a -1 and the second winner was a plus. So -1 R, comma, plus 1.3 R. And then this one would be +1, comma, plus 1.3. So hindsight made that one easy, you know, this best case scenario, but it looks like this would have been like a 0.3 R day. Not that exciting. But you see how it's like easier to see what's going on when you understand you have a game plan going into it. Okay, so again, let's move this out of the way here. Okay, market regime. We are in the bull quiet market regime. Who's in charge? Based on the overnight session. So the market opened right here where it closed last night and just went straight down. So this is telling me some news has hit this market because it went 200, almost 300 Nasdaq points lower right initially off the open. So that's telling me that, okay, where something potentially is happening. Okay, so let's extend this guy forward as best we can because that's still relevant. And then we have this other line that's back from here, right? This is the one. Yep. So we have support here and we're bouncing around support. So I would be looking to buy here, given a reason. There's a reason. Look for a pullback. And now I'll buy above any of these. No buy there. And so far the downward trend has kept. Okay. Now I'll buy above this if it does go high. Okay. I would buy right here. I would be a buyer right here. Stop in at the low of the day. And the open is all the way up here. So this is actually a really nice risk reward trade. So I'm looking to fade this sell-off back to the open. So it took a little bit of pain. And we're coming into the close of the day. Okay, so there's the close. Right here. Okay. So let's see what that eventually would have been. So the high gave us not even a full 1R, but we were looking for something up into the 2 area. And we exited at 0.24. So not amazing. So it's repeatable. This is super important to see. You may not be a banner week. I'm not over here trying to show you the most optimized, most incredible strategy. I'm just showing you that this is the strategy that would be that I would deploy in this market regime. Okay, bull quiet still on. Who's in charge? The overnight session we have a small gap inside yesterday, so that doesn't mean anything. Let's see what we get. Initial sell-off down to the previous lows. Let's go ahead and add that support level because that one held yesterday pretty nicely. And I'm going to go ahead and use it today. Now, the precision, this is one thing I really want to drive home, is the precision you think you need when you're doing this is not there because mean reversion markets run key levels. That's like a characteristic of it. Key levels get ran and then the reversal happens. So you say, oh yeah, 19, 18, 12 is the key line. If it goes below that, man, it's going to 15,000. You know, the reality is when I code my higher frequency algorithms, I code them to run stops at key levels. So this right here, this run, I would come in and I would engineer volume that would in and out really quickly right in here for a couple of ticks. So I would buy it and then I would sell it real quick. And then it would go and do what it normally was going to do because key levels are places of reference. All of what we're doing here is referencing something that gives us an idea. This is where I want to be buying is on a key level here. I just want to look for the right reaction. So I'll look for my curvy setup. There's good. And I'm long. So the long would be above here. My stop is the low of the day. I'm actually going to put my stop below the low of the previous day. This is discretionary, guys. So the next key level I have is right up here. I want to see how it reacts to this key level. And then if I'm lucky, I might actually get a move back up to the bigger level. So far, it was rejected at this level. And that's nice to see. I'm still deciding if I'm going to, what I'm going to end up doing with this thing. I'm going to raise my stop up into here now. So if we go below that swing low, then I will stop out. So I'm locking in right now. I'm getting a little bit more dialed in. I'm getting a little more focused on how I'm doing it. And it looks like, yes, I got stopped. It ticked me. See how it ticks you? See how it does that stuff? Like it does this little let's move it up to like the exact area. So 0.82 R, not a full R. The total, the actual move did get a full 1 R. So you could just exit 1 Rs on this type of system. So 2.25 R, this is a 3 R. And then this is telling us that if it's stopping here, then that's the range that it's in. So some of you would like this would be a fine place to short, and because the risk is really low. Now I'm not doing this one, but the risk is really, really low. You're like that, and so you can get like a full 2R out of a little tiny move. I'm not going to count that because I didn't. All I have is buy dips. I don't have like the full curvy strategy involved in this one. Okay, next, first trade of the day. So again, all I'm looking to do here is buy dips. This was a little bit of a gap down from the overnight session, so there might have been some sort of news. What I'm looking to do is I want to look for weakness on the day, and I'm going to buy the weakness. So that gap down is actually weakness, and something that you could just go straight into right here. I'm not going to take that. You can see how the gap down over here worked really well. This happened too quick for me. I like to let more time pass, but 5, 10, 15, 20 minutes. 20 minutes is doable. I'm not going to give myself. Let's take notes. Let's see what we get. So this stop would have been down here, and here we go. So for me, I would actually want to be, that's a short setup, long position. I think it would maybe get a whole 1 R, not quite a 1 R. And then it comes back and stays in. Now, notice that it comes back to that key level again, and that's where it finds more support. Also, it looks like we're getting somewhere in this area as resistance. So now I can kind of keep track of where I'm at. So far, we have not, all we've had is mean reversion all week long. So no news has really had any effect on the market. Okay, that's the first time we're getting that out. Okay, so whatever. Let me break this down. No 1 R. That's I don't know how to say it. It's fine. Break even takes you out, or you take the 1 R loss. Let's call it a 1 R loss. Okay, this one now. The low on the open has been a key level. This is late to the party, but this is exactly the pattern I'm looking for. The curvy pattern right here from the curvy system. That would have us long on this for sure, with a stop here at that low of the day. And the curvy system would have us out at 2R mechanically, which just so happens to be like right here at this other level where all the volume has been. If I put a volume profile on there, you would see that there's a good amount of volume at that key level. So, all right, so far, this does not look like anybody except traders is involved in this market. This is the textbook curvy trade right here. Textbook 2R, perfect. We just waited and nailed it. This one would have been, if you tighten your stop and did it at this way, you might have, done okay, but this one definitely textbook perfect into the close. Could not have asked for a better setup. Okay, now Friday. I think there was news on. There was obviously news on Friday. I think it was non-farms payroll on Friday that got this big gap, 200-point gap. Okay, I actually remember Friday, so I'm going to be a bit biased, and I'm trying not to. So we had a gap up. Let's stick to our rules here. What our rules say: we look to buy dips in the bull quiet market regime. So if we are playing that game, let's look for some dips. And there we go. Okay, so again, back to the open. Open's going to be, this has been a key level here, right? And then this area generally has been a key level here. So let's just bring these forward and see what we get. I would be looking to buy somewhere. There we go. Long. Got my curvy set up. Okay, let's see what 2R actually is. Oh, that's dollars. Okay, so let's see where I can see 154. You move it up to break even or +1, depending on how you want to run curvy, or you do nothing and you just stay with it, and eventually you get it. I think this was a power move into the close, if I recall. Yeah. So fully, if you hung out and did nothing and you just traded back to the open, it would have been a little over 3R. This would have been a 0.3R day. This was a 0.2R day. This one would have been 2R. So 7 to 8R on the week. Just kind of including losers. All you did was just wait for the key level to be found, which it respected it all week long. Not exactly, but if you look left, you can see that this was a key level here. This one had been kind of worn out, but again, it's just that you want to see the reaction at that area, not so much the when we're talking about mean reversion and day trading. You want to see the levels or the signals or whatever it is be respected. And if they're respected in a way, now the general level will get wiped out almost always. I will actually write code to run those levels. It's a known medium frequency trading type of strategy, is to go find key levels and run stops at that area, because there's a pile of orders just sitting there waiting to be ran. And so you know how much liquidity is there. So you know that it can bear it, and you can get in and you can get out because that much liquidity is there. So if we're taking a step back and being a little bit slower here, you could easily see where, even if you traded this kind of poorly, the only thing you did was wait for the reversals and just realize that you have to build this into your brain. Realize that you are going to get effed with. If you look at a day like this day right here, right? If you look at this day, and you could easily have actually sat through the whole thing that day, and just bought the bottom using the curvy system. If you use the curvy system, if you got in the bottom and you either got out at 2R and you're done for the day, or you just rode it into the end of the day and you made, an extra R. I think that there was 5R available for kind of half-ass trading last week on Nasdaq, just buying dips where the curvy setup formed. Probably 5R on average. There's if you're good, or if you're really good at this job, you would have added to your position in certain places, and you could have doubled that if you just did it as textbook as could be. 5 to 8R was totally doable in this market regime on the Nasdaq. Same probably for S&P 500. I think last week was, I think S&P is doing a little bit more strength off of the lows, but you can clearly see that key levels and just buying dips gives you 1 to 2 trades a day in Nasdaq, also in S&P, in this market regime. Not too hard. So if you want to be doing this, you can join us at Pollinate Trading in the trading lab. We trade like this throughout the week. We do a lot more swing trading. We're think about turning this sort of stuff into trading algorithms, and algorithms doing this sort of trading for you. What I've done here is I've went and got some some ideas. This is the thing. This is why we're so good. I've now got an idea, an intuition, a way that I can categorize the market and something that I could go and code, turn into code, or have an LLM turn it into code for me to test and say, okay, every market regime that's bull quiet, let's do, if you screenshot the trades and you dump them into ChatGPT, it'll see the charts, you tell it what to do, it'll build you some software for that, or you can just go code it yourself. And now you have an idea to work on, a structure to work on. Doesn't need to be, hey, ChatGPT, make me a trading algorithm that's going to have 100% win rate and very high R using Nasdaq futures and never has a drawdown of over 1%, or something like you try to tell it to do that. That's not how you do it. You have to give it, you can't just expect it to understand what you're doing. And I'm going to do a video on this specifically. And I actually am doing a course on a module in the Thunderdome, very deep about how to use LLMs and how to train it. But the idea is, like, don't assume that the AI actually knows how to do this. You need to tell it what to do. You need to give it a lot of context. Pretty much every time I say, like, hey, let's build a trading algorithm that does this, it always says, okay, we'll use the MACD, the RSI, stochastics, and ATR or something all the time, like the same indicators. But the thing that that I focus on here is statistics. I look at more of a statistical side, and I give it the statistics and say X% of the time this happens. What is something that we could do to exploit that statistic? So again, I'm writing about this stuff quite often. PaulNateTrading.com. You can join the newsletter for free. It's pretty actionable, and like, it gives you knowledge, statistical knowledge, and edges. I'm sharing a lot of edges in the market. Do like and subscribe to the video. I'm being a lot more active in YouTube these days. So I'm really enjoying it. It's a lot of fun. I'm getting a lot of good feedback. If you have any questions, put those down in the comments. And if you want the Curvy system, the Curvy trading system, there's a link in the description. It'll give you 50% off. And for a limited time, I'm not sure how long that, when you're watching this video, how long that link, discount link is going to be good for. But in either case, it's the system that's built to deal with this type of markets. It's also excellent in bear markets. I built the system in 2022 during all that stuff, and it just crushed. It was such a perfect system for that time, and adapting it to this environment has been awesome too. All right, I think that's it for everybody. You have a wonderful day. I love you all, and